Hey everybody, Chuck Barone here. Monday, March the 6th, 2022. Another week of crazy off and running already. Hopefully this week won't be as exciting as it's been. Maybe we'll get a little bit of good news. There's not a lot happening this week. There are some big things, just not going to be an avalanche of data like we've been getting. So hopefully this week will be a little more calm. We'll see. Anyway, before we start the show, always welcome everybody to the show. Thank you guys for your support, man. What you guys do, you guys keeping with us, staying with us and watching these videos, talking to your friends about the videos means the world to us, guys. We really appreciate your support. Markets today. Well, it was a big nothing burger today. Just not a lot happening in these markets. A lot of stuff coming later this week. We'll be expecting Chairman Powell. Our friend St. Jerome will be talking in front of the Congress critters this week, which is going to be a lot of fun because he's going to get grilled by both teams. The Republicans are going to scream bloody murder that monetary policy was too loose, and that's why we got all these problems now, and what the Fed's wrecking the economy and blah, blah, blah. They're going to point a finger at him and scream bloody murder. And the other team, Team Blue, is going to be screaming that monetary policy is too tight and he wants people to lose their jobs. And this is a no-win situation for him and should be what I call great comedy. Anyway, back to the markets. Stock market today mixed, basically a flat day with the Dow gaining 40 points, S&P up 2, NASDAQ losing 13. Not a lot to write home there. Market's holding its breath, waiting on data. Bond market also basically a flat day today. 10-year rising 2 basis points, 3.98%. 2-year also up 2 basis points, 4.88%. So you still got that 90 basis point inversion there. Let's see if they can get you. I wonder what the over and under would be in a Vegas casino on. Will it make it to 100 basis point inversion? That's huge, guys. Not really seen in the bond market very often. Forecasting, foretelling, whatever the word is, a pretty significant recession coming. Dollar today down small, just about a quarter of a point on the index, 104.28. Dollar just nothing happening in the currencies right now. Metals today down also. Gold down 850, 1847.50. Silver down 22 cents, 2104. Nothing happening really in metals either. Everybody's waiting on employment and Powell. Oil today up. Actually, oil had a little bit of a move today, only up 78 cents. But more importantly, breaking above that $80 resistance, closing $80.40 per barrel. Let's see if they can hang. Let's see if they can hold it. Oil has been kind of all over the lot over the past 6 months or so. First, it looked like it was going to go up. Biden goes to Saudi, basically gets kicked back out. Nothing to show for it. The war rolls around in Ukraine. Prices go crazy. Next thing you know, China, lack of demand. Oh my God, there's not this big shortage they were afraid of. Not to mention pumping millions of barrels out of the strategic petroleum reserve. Keep prices back down. Now heading back up. Let's see, they're talking again. It's all China now. China. China might want to buy more oil. China's buying their oil from Russia, man. They're buying it off market. They're buying it at discount. We're paying 80. I'm guessing they're probably paying significantly less than that, right? Oil, a fascinating market, but be very cautious trading in it. Bitcoin today up very small, up $25, 22,451. Not a lot happening with Bitcoin, surprisingly, though, because the market in cryptos hasn't been good. Another crypto company and big deep doo-doo, regulators involved. When all of this stuff starts really getting a lot of airplay, if it ever gets traction, it's just going to be a constant barrage of nonsense trying to knock crypto down for the benefit of whoever's paying them to do it. Anyway, as always on Monday, we want to talk to you guys about stuff we're going to be hearing about this week, stuff that's going to move the markets. So today we're going to get factory orders. I have not seen that yet. This will give us a little bit of idea of how our manufacturing is doing, our orders up or down, how's it looking in spite of price increases and inflation. No sign, at least what I saw, what they were expecting. On Tuesday, we're supposed to be getting consumer credit numbers. Now this is going to be really terrible because last month it was up like 18 billion and I couldn't friggin' believe it. On Tuesday, tomorrow's numbers, they're expecting consumer credit to be up $25 billion. Consumers going in hock up to their eyeballs. Hopefully, it's not the viewers of this show, the people who we've been preaching to, getting out of debt is the way to a happy, prosperous life. Learning to live beneath your means. If you're not happy where you are, make your means go higher, but don't spend more than you make. So that's going to be a fascinating number to see how that comes in tomorrow. And also we'll get wholesale inventories, which will give us an idea of, how producers are doing with their inventories. They hate building up inventory. They want to do this, turn it over real fast. So that's going to be an indicator of, will there be some sales coming down the road as they want to reduce these inventories, and how business is doing as far as product moving out the warehouses. On Wednesday, we'll get the Mortgage Bankers Index. That one's been all over the place. I'm telling you right now, though, new houses are probably doing a little bit better because they can offer massive incentives and pay a lot of money to offset the rate increases. Existing houses, depression. It's, the 30s again. Mortgage Bankers Index, so it'll be fascinating to see how that looks. We'll also get trade deficit information for January, expected to be $68.7 billion, or February's trade deficit, $68.7 billion. On Thursday, it'll be another big day. We're going to get initial jobless claims. Obviously, this is the one the Fed's looking at. How's that job market going to stay hot? They didn't have a prediction on what they were expecting as far as jobless claims, at least in the review in the Wall Street Journal yet today. They've been kind of bringing those expectations down. The job market's still been beating it. It's going to be an interesting and important day on Thursday. And then Friday, wrapping up the week, we'll get the non-farm payroll numbers, expected to add 225,000 jobs in February. We'll get Fed budget deficit information. That's going to make everybody cry. And we'll get the unemployment rate, which is expected to stay at 3.4%. The big news of this week, as I mentioned earlier, St. Jerome of Jekyll Island will be in front of the Congress critters, getting grilled. There's this guy, it doesn't matter what he does, he's not going to make the Congress or the political class happy. I hope he has the stones at least to fight back just a scooch on how irresponsible they all are being with fiscal policy. See, the Fed gets to set the monetary policy. They get interest rates and the amount of dollars in circulation and a lot of important functions. The Congress is who spends the government money. They're the ones who spend deficit. They're the ones who spend Social Security funds. They're the ones now who are going to teach us what the right thing to do with money is. And they don't want to take any responsibility for this inflation, even though they're just spending bazillions and bazillions of dollars, creating them out of thin air to spend them, borrowing like we have an unlimited source of repaying this money. It's just bananas. But this is going to be the highlight of the week. Hopefully some of you guys will get a chance to see some of this stuff, but we will be reporting on it in detail, giving you the highlights. I'm going to guess Powell's going to take a pretty strong tone. He's going to talk about this fight isn't over, keeping rates higher, which will make the Democrats go crazy. He'll be talking about, they're going to be asking him about recession. They're going to be asking him all kinds of fun stuff. So we'll be having a lot of news regarding Powell in front of the Congress this week. Other quick stuff today, not a lot of news to report, but I was reading, this was really sad. 47% of people making more than $100,000 a year. So these are six-figure incomes, 100K plus. 47% of those people now living paycheck to paycheck. Can't keep up. And when you get to that level, when you get to $100,000 a year, you have a certain lifestyle you're living in most cases. That's kids in better schools, fancier neighborhoods, fancier cars, bigger payments, typically more debt. So now they're in the same boat as poor people, man. They have more stuff, but what in the hell good is it? I mean, what would you rather have? A new BMW or the cash in the bank? One of them's going to go up in value. One of them's going to go down. Don't get me wrong. You can't drive cash in the bank, right? But, rich people now, what I would consider rich, if you're making, 100, 200, 300, 400K a year, and you're living paycheck to paycheck, shame on you, man. That's not the way we're supposed to be doing it. People loading up on debt. We're going to get consumer credit numbers. I read this today. Credit card debt, credit cards, up $38 billion in the third quarter of 2022. We're waiting for fourth quarter numbers to come out. I'm sure it's just going to be astonishingly high. $38 billion in credit card debt, man. You know what the interest is on that? $38 billion in one quarter. And you're talking, consumers racking up more than $12 billion a month in credit card debt. And 15%, 20%, some people paying more than that. I don't know how we're going to come to a happy ending on all of this stuff, but I sure hope that somebody smarter than me does. And finally today,